Hey everybody, this is Josh Wood from expatexchange.com, and welcome to Let the Adventure Begin. I'm really happy to have Jake Barber back with us on the show. Jake is the founder and CEO of SJB Global, which has emerged over the last several years as one of the most highly respected and customer-centric financial advisory firms for expats worldwide. What always makes these conversations with Jake so interesting is that he brings both the professional side and the personal side. He's an expert in expat finance, but he's also lived internationally since childhood and has spent much of his life in different parts of the world. So when he talks about life abroad, raising kids overseas, or planning for the financial realities of an international move, it comes from actual lived experience as much as it does from his expertise. In this episode, we get into whether it's becoming more expensive to live abroad, the hidden costs families can run into when moving overseas, what it's like raising kids in a bilingual home, and even whether a digital nomad visa is always the right choice for people who want to work remotely in Europe. Jake joined us from Marbella, Spain, where he lives with his wife and children, and it was great to have him back on, and I think you'll really enjoy the conversation. So let's get right to it. So Jake, welcome to Let the Adventure Begin.
Yes, thank you, Josh. Nice to talk to you again.
Yep, good to see you again. So right now, expats are having to deal with a lot of uncertainty. This time around, it's Iran, and before that, it was Ukraine. It seems like there's always something going on in the world where there's some level of uncertainty that's roiling the financial situation for people investing all over the world. So what advice would you give to them given the current realities?
Yeah, I think when you break that question down, it depends on some of the circumstances, but also it has a lot of impact on how old they are and when they're going to be spending money. Because the impact on Iran currently hasn't been too bad on the stock market, but it has impacted certain sectors and industries quite a lot. Also, it depends on where you live. If you're undecided on where you're going to retire, that of course gives you more flexibility because if you were looking to move to somewhere that's directly impacted by what's going on in the Middle East, you would shift your decision and go somewhere else. Myself, for example, I was actually looking to relocate my business to the Middle East and got tax advice a couple of days before it happened, and now I'm looking at a different option. So I think the benefit is as an expat is the fluidity of not necessarily having that one particular home, but being able to diversify on where you're going to end up or move to.
Right, right. So, you mentioned about moving the business to the Middle East potentially, and you've lived all over the world. So, not even from a financial perspective, but from a living perspective. When expats are living far from home and you have these kinds of events happen, what advice would you give them as someone who's lived through a lot of those kinds of realities?
The first time you move, it's a very daunting, big thing, but if you end up doing it more than once, it becomes a bit repetitive in a sense that it's not that big of a decision. So a lot of people could be forced to make a move by looking at people that are living in Dubai and things like that at the moment. They're forced to leave their home. They could have been there for 5, 10 years, and now they've got to go back to maybe their home country or look for a job somewhere else. That's, of course, very difficult. But if you're making the move because it's somewhere that you want to go, that is, of course, a lot more emotional and a bit more exciting. But yeah, I think making that move multiple times, it becomes second nature almost.
Right. It's funny the way you characterize that, emotional and exciting.
Well, because there is that what's the word to use? It can be overwhelming when you've got 50 different things to do, but then the excitement, as long as the excitement's higher than the difficulty and the bit that isn't maybe as fun, then it's a net positive.
Right, right. It changes the landscape. But generally speaking, would you say it's getting more expensive to live abroad, or is it just different, or is it just more fluid? How would you characterize what it's like to live abroad from a financial perspective right now?
I think maybe it can be quite difficult to understand exactly what the full costs are, especially making the move initially, because you've got housing to think about, whether that's furnished, unfurnished, buying, renting, the cost of immigration, the cost of schooling if your kids are going to private school and things like that. Breaking down all of those costs as one-off costs is almost a bit like retirement. When you retire, you've got all of these other costs to think about, which maybe you hadn't thought of before. And the first year or two becomes a lot more expensive until you figure out exactly how that breakdown looks on a monthly basis. There are certain websites you can look at these days, but it's all specific based on what you spend your money on. And that's important with inflation as well, because someone that's retired versus someone that's employed or someone that's still working has completely different impacts by inflation. But with a sense of, is it more expensive to live overseas? The cost of living's gone up everywhere. But the benefit you have is if you are working remote or you're planning to retire, you can go somewhere that fits within your budget. Because retiring to somewhere like Spain is going to be very different to retiring to somewhere like the US, because the cost of living and healthcare and things like that are completely different. So you need to look at where the money is going to be spent, what is the most important thing for you, and just seeing if it does fit into what your financial plan is and your goals.
Right. So obviously, some of the things you're describing there, currencies are going to be really affected by everything that's going on and where you choose to move. So, how is all this affecting currencies over, the last few, the last month, the last few months? How, what do you see happening there?
So the last year and a half has been significant major currency fluctuations. Last year you saw a huge decline in the US dollar. So against the euro, I think is about 14%, and the GBP was close to 10%. That means if you had your money denominated in euros, depending on if you hedged it or not, you could have ended up being a lot better off. This year, since the Iran wars kicked off, the dollar's strengthened. So when the ceasefire happened a couple of days ago, you saw the dollar weaken by 1% against major currencies. But that's not very normal. You don't often see a 1% swing in one day. So it has had quite a negative impact on people. Imagine an American that's looking to move to Europe, and all of a sudden the currency's 14% worse off. That has a big impact because it means you've got 14% less spending power. There are ways to protect yourself by putting your money in different currencies, but it has to be done correctly by actually using assets that are hedged. Because things like cash, of course, they're completely hedged. If you move your money into a different currency, it's just sitting in that cash currency. Things like bonds are often always hedged, but then equities are not. So if you bought the S&P 500s, but you bought it in the base currency euros, and it's not hedged, and the S&P 500 went up, I think last year 20%, but the dollar dropped 14%. You've only actually made 6% in the currency that you can see. If you had the base currency of dollars, you can see it at 20%. It's the exact same return, but if you're spending the money in euros, it's actually 14% lower.
What's your thought on Bitcoin given all of the uncertainty we're seeing?
Yeah, I'm a big Bitcoin fan, but it hasn't been a good 6 months or even the last couple of years. So I think it's just a case of crypto's very much in a bear market at the moment, and when that does happen, there's very little attention towards it. It's not until the attention comes back that we start seeing things improve. But it's not been correlated to gold at all, which in the past it had. But in the last few weeks with the Iran situation, it has propped the price of Bitcoin up. But you could argue that based on how much it was oversold, it wouldn't have taken much to actually push the price of Bitcoin up.
Right. So when you talk about crypto being in a bear market, does that mean opportunity to you?
Absolutely. If there was time to buy and start averaging your price in, it's when markets are low. It's what I did in the 2021, 2022 bear market. I just loaded up every month, and a lot of it was in Solana actually. But a lot of people would look at the price, and I had done this in the past when I wasn't experienced. You look at crypto and you think, well, it could easily drop another 50%. So let's say you were buying. I mean, Solana dropped 96% in the 2021, 2022 bear market. So a 50% drop, even though it's gone down 90%, is actually quite likely. But the upside is what you've got to look at. Where was the last all-time high, and how many X is there between now and the all-time high price? Because even with a 50% or 80% downswing, if you're buying on a regular basis, you actually want it to keep going down because you can buy units at a cheaper price. And that's how you end up with a much lower average price with regards to units as opposed to the monetary amount that you're putting in.
Got it. Okay, shifting gears now. We have a lot of US expats and British expats in our audience. in the last year or so, if someone is already living abroad or they're considering moving abroad, what changes have there been for U.S. expats from a tax perspective? And then after that, I'll ask you to answer the same thing for people from the UK.
There's always going to be changes from a tax perspective, but I think one thing that's been really good over the last year is just the awareness of what people have to do. So the word cross-border, people probably wouldn't have understood in the past, whereas now it's become much more of a hot topic. I say hot topic because, let's be honest, tax may not be the most exciting thing for people, but the importance now is getting the correct advice, because we get a lot of people come to us and say, well, ChatGPT says this, so can you just confirm that that's correct advice? But probably one of the last things that AI is going to be able to conquer is cross-border tax, because there's so many nuances to it. There could be 20 different outcomes by one topic. So getting it right is really, really important. But I think nowadays it's making sure people are planning ahead, which in the past they wouldn't have done. 3 or 4 years ago, almost all of our inquiries were people that had already made the move. Whereas now we're seeing a lot of people making inquiries 1, 2, even more than 2 years before they move, sometimes even 5 to 10 years, which seems a bit over the top. But that planning ahead is the one big difference people could make to making sure that they secure the best possible outcome when they do move.
Yeah, it's funny you mentioned the ChatGPT thing, and you think about all the different treaties and how they can change, and the different environments. I think just from when I go to use ChatGPT to help me in a editing software, something like that, if there's been a new release on the software, it's giving me completely wrong directions, and I'm hunting around for something that doesn't even exist anymore. So when you think about it from a financial perspective, you're really kind of rolling the dice if you're going off of what a chatbot's telling you still, as opposed to what you're getting from a financial expert who's keeping tabs on these things on a day-to-day basis.
Even when you've got experts like ourselves with cross-border tax lawyers, estate planners, if we all combine that together, sometimes it is still difficult, where we have to maybe put our heads together for a couple of weeks and really delve what the best opportunity is. Because it's not the black and white answer that somebody needs, it's the correct answer based on a fluid situation. It's not about, I'm going to move from here to there. It's what happens if I move back, or what happens if one of my family members lives here or lives there. And all of these different scenarios make it really difficult. And it's not like the advice we give on day one is going to be the advice moving forward. That's why we have to review things on an annual basis to make sure whatever the plan we put in place is still going to be correct. But it can be very difficult to get that right. Even myself doing my own planning, because of the expat nature of my family, with my partner being from Colombia, my kids having a UK passport, living in Spain, the domicile rules towards the UK on how it works with inheritance tax. All of that requires very particular planning, and what happened 2 years ago made things completely different to what it was before.
Right.
So yeah, it's always going to be complex, especially I think with what countries are doing now, where they're trying to increase taxes. That will then create opportunities with tax neutral jurisdictions where they try to capture some of these clients, especially when there's withholding tax issues between countries, or even estate or inheritance tax planning issues. A good example could be one of my clients that just moved to Malaysia, as a lot of their funds in the UK sitting on a UK platform, but the asset manager was a US based asset manager that was living in Singapore. So there was all of these different, the company was in Singapore, but they'd set up the money management for a US entity. Because he moved to Malaysia, he had to close down his UK platform, and they decided to set up a US platform. But the problem with the US platform is the US has no double taxation agreement with Malaysia. So all of these assets then, because he was a non-US citizen, there was a state tax on anything above $60,000, which meant there was a huge on the size of the account, a huge estate planning issue, just because he's moved countries, and the platforms decided to change the location of where his assets are based. So
Right.
things like that, you've got multiple different cross-border issues that do arise by just moving country.
Which begs the question, what are the biggest mistakes you see US and UK expats making recently? Now, that's got to change from time to time. What would you say generally when expats are coming to you? Are you finding that some of them get themselves into situations where it's difficult to get out of and there's financial repercussions for decisions they've made? What are you seeing currently?
For Americans, it's almost always tax filing and estate planning. So not just because you've got a US will set up in the US, it doesn't mean that's going to work when you leave the country. So it's looking at the agreements between the country where you're living and the US and making sure it can be certified in that country, because different countries have different laws, but there are ways to use your home country law if it's done in the correct way. And those are often simple fixes that people don't think about, but if something does happen, it becomes really problematic. And from a tax reporting point of view, the tax forms that you filed in the US, you don't stop filing because you've left the country. And there could be other forms that you've now got to file, not just in the US, but the country of where you're living. And what we've done recently, we've actually partnered up with a cross-border tax platform that can tell an individual based on their assets what they have to file based on the country where they're living. So that was often a really big need for American expats, and we're trying to find a solution where we can actually provide this as an option to our clients. And we launched this a couple of weeks ago to try to deal with that. So that's the one big thing for Americans. Brits, it's a different mindset. I think a lot of the times they prefer to ignore. um, and I think that is because they don't have the likes of the IRS coming after them. But there's the HMRC in the UK at one point had something like 4 to 5 million different alerts out to people that had some sort of tax evasion, whether they meant to do it or not. And that could be a failure to report certain assets that do still apply in the UK. And one of those is UK rental property. Someone that's living overseas, most countries will still tax property in their home country. And then based on the treaty, there could be a tax credit or there could be a tax deduction. They would just go, right, well, it's below the personal allowance in the UK, so I'm not going to pay tax in the UK. And I'm not going to declare that in the country where I'm living because how are they going to find that out? It's so common. It happens so many times. And when we try to explain that actually you can't do that because you've got common reporting standards across most countries, with the increase in tech that a lot of countries are using as well, all of these authorities are communicating this information together. So if you think you've avoided it in the last 3 years, but you're now still going to try and avoid that, that's the wrong thing to do, because they want to get this money. The last thing they want to do is lose money to people that are trying to avoid taxes. And it's a quick win. If they can apply technology to get this, they're going to do it. And every year it's just going to get more and more in favor of the tax office.
Right. Yeah. The technology tools that they have to track down money are getting more and more robust. It's actually kind of incredible. Yeah. It's just not a good idea to try to hide money. Yeah.
No, definitely not. It's just pay the tax, and if there's tax to pay based on investment gains, you've done well. So sometimes
Right.
it's good to just pay it knowing that you've actually made money.
Right. Take the win.
Yes.
All right, so we want to also, we have a lot of fun taking your content and using it to create social media clips. So we just want to go through some quick questions that you can answer quickly for us. Some of it may be a little bit redundant to what you've already covered, but we'll just kind of do it like a lightning round kind of thing.
Sure.
So what's the one financial mistake that costs expats the most money?
I would say getting the incorrect advice. There's so much incorrect advice, not just from financial planners, but tax advisors, immigration. If you make the wrong decision, then it could be extremely expensive. And that's the benefit these days of being able to shop around and looking at the reviews of companies. If I was to use someone's services, I am reading not just the 5-star reviews, but the 1-star, the 2-star, the 3-star, and see if there is a repetition, because getting the wrong advice just means you've got to pay again, and you may end up having to pay for the mess that was created in the first place.
Right. I do that on Amazon when I buy something for $25. Looking for a service where someone's going to be controlling or helping you with your finances, then it's a great idea to be doing that for sure.
It's why
Um,
I was just going to say, it's why we focus very much on reputation. So if someone were to Google us, we have over 300 reviews. 95% of 5-star, 5% of 4-star. There's none below 4-star. So it almost seems too good to be true, but at some point we're going to get a negative review. There's no way around that. But over an 8-year period, we've managed to not have that because we focus so much on the company culture of making sure we keep our clients happy.
So there's a personal aspect to what you guys are doing.
Absolutely. If someone doesn't fit into the company culture, which is doing the right thing, then they don't stay in the company, regardless of how good they are. For us, the reputational risk is the most important thing.
Right. And again, I think this also plays back to where, as an expat, you have a lot of experience of what it's like to move around and what that is. You were saying emotionally before. I mean, that's a lot to manage for someone when they're moving their whole life, including their financial life overseas. So to have someone that's been through that as often as you have, it's got to be really reassuring.
Definitely, it's working with someone that knows your pain points, isn't it? It's a bit like going to a therapist that has no understanding about what you actually have gone through. If there's a relation about the particular scenario and the particular emotion that person's going through, then it's an automatic rapport, which means there's an element of trust that's already there.
Yep, that's exactly right. Okay, so if you had to pick one or two things that people always get wrong when they move abroad, what would they be?
Expecting the cost of living to not be as much as what it is and failing to plan for the taxes based on the country where they're living because they're so used to the taxes in their home country. That's huge. It's always under expected. So for us, we always make sure we over expect what those costs are going to be and be very conservative with those numbers. The next thing would be expecting too much from their financial plan. So if they've achieved X amount of returns over the last couple of years, they're just expecting that to be their foreseeable returns. And then they're overinflating what they're going to end up with. That's a bad strategy. It's always best to be really conservative to make sure that there's no unnecessary lack of cash at any point during their future.
If someone is moving in 6 months, what should they be doing right now?
They should absolutely speak to a financial planner like ourselves because with what we do, it requires a lot of planning, a lot of weeks of discussions, and it also there are certain opportunities that are available whilst they're still a tax resident in their home country that are no longer available once they leave. Immigration, of course, getting that right and understanding what the cost of that move is going to be. It's no good just looking at, for example, what's the cost of the visa. You have to look at what the cost of education, what the cost of moving into a new home is. Do you have to put deposits down? Adding all of these figures up, but then adding some on top of that as well for a rainy day. And the amount that you add on top needs to be way more than what you currently got in your home country. So if you normally keep 3 months expenses, 12 months is way better because then you're not going to leave yourself short when you've just made the move and it's going to be stressful anyway. So you want to give yourself enough space, sorry, enough time and enough money to be able to deal with any hiccups that happen along the way.
Moving right along here, I want to just get into a few audience specific segments. Just focusing on retirees, what do retirees tend to get wrong about moving abroad? And do you see a difference between those from the UK and those from the US in that regard?
Um, I think the one thing retirees often get wrong is they don't have a plan. If they don't have a plan, they can be really stressed out about whether they're on track or not. I spoke to a client yesterday that was worrying for months and months and months. We sat down, and deep down, I knew it's a friend of mine, but deep down, I knew that he was actually okay. And it wasn't until I went through his finances and I said to him, "You can actually run a negative cash flow of 100,000 euros for the next 15 years before retirement and still be okay." That it finally clicked in his head that actually everything was going to be okay. But unless you understand how to do that, it's very difficult to compartmentalize how all these numbers work because you've got some assets that provide an income and some that don't. It's the assets that don't provide an income that you have to account for. And if it does provide an income, when are you going to get access to those funds? Social Security is at a particular age. If you have rental income that has a mortgage, you can only really factor that in once the mortgage has been paid off. So breaking down these assets with specific access ages is very important to do, but without the tools, it's a really, really difficult task. And then you end up getting stuck in your head and you may even be underspending. So for me, the best job is when someone says to me, "I only want to spend X in retirement," but I say, "Okay, you can actually take double." That's a really good thing to do because people often do underspend. And the last thing you want to do is be the richest man in the graveyard.
Right. Well, it depends how many kids you have, maybe. I don't know. Okay, now talk to us a little bit about digital nomads. Are there some tax implications that they don't understand where they might get themselves into trouble? And then overall, what are the cost of living benefits that you see them making?
Digital nomad visas are interesting because people often only look at the headline figure. So if you take, for example, Beckham law in Spain, okay, your overall tax rate may be great, but there may be other ways of doing that. So if you had a business, for example, you're just looking at the flat rate across everything, but then it could add implications to, for example, if you sold your main residence, where you would have not paid capital gains tax on a normal residency visa versus paying capital gains tax. And there could be other things such as having a business where you're splitting your income between spouses. That way, you're utilizing the tax rates from two individuals and having the benefits of paying into Social Security, where based on a certain number of years, you may end up getting Social Security at retirement as well. So the headline figure is not the way to look at it. It's looking at all of the different elements based on your current circumstances. And there are a lot of times where it may not be beneficial to use the digital nomad visa because you'd actually be better off by using a normal visa, but working with someone that can do the tax planning to make sure you end up paying less tax. Because tax is one thing, but the benefits with it as well, such as healthcare, Social Security, or even other things such as reductions in tax rates based on how many kids you have and things like that.
Right. So taking a holistic view rather than just what's being, what the headline view is of being a digital nomad and that sort of thing.
Yeah.
Yep. Okay. Now, for families, and you've got a family living in Spain, and you're from the UK, and your wife's from Colombia, right? So, what are the hidden costs of having kids overseas and being an expat family?
So if you're moving to a country where you can't speak the local language, of course, that limits where your kids can go to school, depending on how old they are. If they're 10, 11, 12 years old, you're from America or the UK, you're moving to Spain, putting them into a Spanish speaking school, of course, is going to be very difficult and it could have a negative impact to the overall results they get before they graduate. So this creates significant additional costs because you have to put all of your kids through private education. And depending on how many kids you've got, this could be really expensive. And then you've got to look at, are there any tax deductions by going into private education? If not, and you're looking at the income tax rates, you could end up having a significant amount of your income going towards something which you weren't doing before. That is hands down the number one thing. Other countries may have requirements to do private healthcare, which in some places isn't that expensive. Of course, the US is really expensive, but a lot of countries in Europe, private healthcare isn't too much, but it still might be 3 to 5,000 euros per year, which again is net of taxes. So if you're paying close to 50%, that's 10,000 euros of your income going towards private healthcare. Those are the two that definitely stand out. Some might be reduced based on the cost of food or the cost of rent in the country. So sometimes it can even itself out, but a lot of times, if there's those two things, such as private healthcare and private education, they can add up to a significant amount of money, and it does end up playing a big part in where someone's going to move. Because if you look at a lot of the private education costs in places like the Middle East, like Dubai, it's very, very expensive compared to places in Spain where it's a lot cheaper. And then factoring in what your overall income is can have a difference between moving there or not.
As I said, and our listeners know, our audience knows, you've lived all over the world. For your family, like for your kids, what is the benefit you see for them of living overseas? And you're in Marbella, but you've lived in other places. I think your kids have always been in Marbella. You can correct me if I'm wrong, but what have the benefits been for your kids and your family as a whole?
Yeah, so I think a huge benefit is just having that exposure to multiple different cultures. So my kids do go to a very good local Spanish school, but in the school they have their friends and they only speak English. Having that mix of two languages is amazing to the point where it's quite funny where my daughter, who's older, she's 6. She will speak a sentence, but it will have 1 or 2 Spanish words in there. And I'll say it in English. She knows the words, but she just likes to throw the odd Spanish word in there as well. But she speaks to her friends only in English, but she speaks to my son in Spanish. Only speaks to me in English. My kids only speak to the mum in Spanish, but between me and my partner, we swap language every Monday. You wouldn't be able to have that if we just grew up in one country. Certain families don't take advantage of that, and I think it's something that you absolutely should do. But having a mix of multiple cultures, it just plays such a big part to the development of children, which I got from a young age because I grew up in Germany. I lived from 0 to 5 in the UK and then 5 to 10 in Germany. So I got that exposure, and it just meant that I was going to continue to have that exposure in my adult life. And it creates a lot of creativity in people's minds. A lot of entrepreneurs are actually immigrants or have been immigrants at one point or another. And you have that adversity that you have to overcome, which creates a lot of character in individuals as they grow up.
From my, I have a psychology background, and I'm hearing you describe what your daughter's doing. It's just, my mind is going to what's going on neurologically there, and from a neuroplasticity standpoint, what's happening with the pathways and everything. That's just amazing. And the impact that has on someone's development, it's incredible.
Yeah.
Yep. So, Jake, that's all we have for you today. Thanks again for joining us, and we hope that you'll come back and do it again.
Yes, thank you, Josh.
Okay, great. Thanks again.
Thank you.
And that's it for this episode of Let the Adventure Begin. It was great to have Jake on, and we'll look forward to hosting him again. SJB Global is one of our partners, and you can learn more about him and SJB's services at sjb-global.com. Again, that's sjb-global.com. Thanks for joining us, and remember to follow the show wherever you're listening, and also to become a member for free at expatexchange.com if you haven't already.